Hey, what is up everyone? Welcome back to the channel. We're going to be doing our weekly recap today for the 15th to the 19th of August 2022. We're going to go ahead and cover four areas. Number one, the overall performance of the M1 Finance portfolio. This is now 4.5 years old. Number two, we're going to go into the weekly performance. What stocks were up, what stocks were down this week. Overall, the indexes were negative this week. So we're going to see how our portfolio did in comparison to the main indexes. Number three, we're going to go ahead and cover the activity over the past week. We did end up buying a couple stocks, right, on Monday. So we're going to go ahead and cover those and update our dividends. And number four, we're going to go ahead and update our dividend tracker, see where our current portfolio is paying as far as dividends go. In this portfolio. This started at $0 just 4.5 years ago by adding in a little bit every week. We have continued to max out the Roth IRA on a yearly basis, and we're going towards that goal here in 2022. So with that said, if you guys have not yet subscribed, definitely subscribe. I would highly appreciate it. Go down below, give this video a thumbs up. Those two things right there are completely free to do, but they help out the channel so much. And let's go ahead and get into the video. Okay, let's go ahead and jump over into number one. So here we are into the Roth IRA. We're going to be covering the overall performance of the portfolio. I believe we were a little bit lower last week and we moved higher. So I'm guessing so far that we moved positive this week, but just slightly. We're up 63.41%. So we're near all-time highs. As far as portfolio equity goes, we are at all-time highs, just because we've been continuously adding capital into the portfolio. And our top positions, check this out right here. These have sloshed around quite a bit. We had WB Carey, I believe, in second or third place just a few weeks ago, meaning it was up in this area. ABM Industries, which at a point was negative in the portfolio a while back, is now in second place at 126%. Main Street Capital, that one sloshed around. It's in third place at 119. Apple will probably remain, the most dominant position in the portfolio, up a nice 313% since we started investing in this position. Now, if we scroll down to our bottom, our worst positions here, IIPR has and will remain one of the worst positions in the portfolio for probably a while. It's going to take a while for this one to turn around and make any sort of recovery. Our second to the loser here, Clorox. This one has been showing signs of recovery. At a point, it was down around 40%, so it has been kind of coming back. And our third worst position, Stanley Black & Decker. Digital Realty Trust looks like it had gone down during this past week because it was already in the negative, but I believe it was in the negative by 2 or so percent. And then the rest of the portfolio has been pretty positive. We have added into the new positions this year. So a few of our new positions that we added into this year were Starbucks. We just started this position not too long ago during 2022. Waste Management was another one that we started up during this time frame. And that is it as far as positions that we started here in 2022. We have, of course, averaged into other companies in the portfolio over the course of the year. So yeah, that's the overall performance, doing really well, chugging right along there. Now jumping over into the weekly performance. Yeah, we are up 0.39%. So this is all market gains. We did not sit through any any X dividends. Sitting through X dividends mean that your portfolio would then be paid in the future, earned dividends. In this case, we didn't sit through any X dividend dates this week, so all of this market gain or all of the gains is just from the market. So that's net positive. Our best performers this past week, Cisco Systems bouncing up 4.48%. So this one, I don't know, I haven't checked it out, but it may have been earnings related. IIPR, this is our worst position in the portfolio, so to see that this is kind of propping up by 3.75 could mean that it could be bottoming out. This could be an opportunity where I didn't want to invest into it blindly last week because I just needed to do more research. So seeing that it's up 3.75% as of the last week, this could be an opportunity for me to go through and say, hey, why did it move up? Is it showing signs of recovery? What kind of news is kind of coming out? M1 Finance has a little bit of information where you can kind of click on it here, and it goes into some articles talking about, is it a buy? They're separating the weed from the chaff. So they're kind of going through and kind of doing a little bit of articles in there, but it's not really thorough. So those are our top three winners, and Colgate. Colgate's, one of those consumer style companies. Our worst positions over the 1 week. JP Morgan, interesting to see this one's down 2.87 with rising rates. I think that would be kind of net positive. So JP Morgan down 2.87. Main Street Capital, this is pulling it off. This was in second place. It bounced down to third place. You're always going to have slish slosh in your portfolio where positions move up or down. That's completely normal. You're not really investing in a 1 week, 2 week, 3 week, 1 week, 1 month, 1 year basis. A lot of the times when you're buying companies, especially like dividend related companies, you're looking for quality over quantity. So you're trying to, I've seen investors out there who have portfolios of 85 dividend companies where they may have $100 invested in every single dividend company, and they can't tell you which ones they're actually invested in by the top of their, you could probably name a list of companies that they're invested in and mix it in with some other ones. They wouldn't recognize the ones that they're really invested in. So I like to kind of really pick and choose what I decide to pick and, drop into my portfolio. I kind of have a good reason as to why I'm buying a bit of it, either in speculation or just because I think the company is great long term to invest in. So let's see how we did in comparison to the main indexes on the week. So it's starting off with the S&P 500. On the 1 week, they are down 1.21%. So big drop there on Friday. Down 1.29%. This is what I'm thinking is going to happen. I really don't think there's a lot of reason for the indexes to be breaking their 200-day moving average. If I jump over here to Y charts real quickly and just show you SPY, this is the position that I primarily look at and buy myself outside of the M1 Finance portfolio. We can see that just recently, within the last month, the SPY got a nice 10% gain there. But what was the reason? There was no reason. Earnings came in. They had already lowered guidance. So they were coming in at or barely breaking their lowered guidance. We don't really know what's going to happen here in the rest of the 2022 or 2023. There was no reason for the S&P 500 to break that 200-day moving average at 231. So at 229, it just hit that wall, said, nope, I'm not going any higher. And it's now bounced off of it. And now we could see this retrace all the way down to about 400, right here, 395. This could be a good support level where it could bounce, or it could break through that and just continue on its downtrend. So I don't see any reason for it to kind of continue moving higher as of this point, unless some big news comes out that, is positive for the market. But I myself would like to kind of see that this kind of just trends in this line. If it goes back down, great. If it doesn't, great. But that is the S&P 500 on the weekly. Jumping over to the Dow Jones, essentially flat on the week. So this is where my portfolio kind of sits right. We usually invest in companies that are semi-mixed between Dow Jones and the S&P 500. Ours on the bright side actually went net positive this week versus Dow Jones down 0.16%. But I'm going to count that as flat. NASDAQ here took a beating, down 2.62% this week. Wow, I don't know what that was. That may have been like Tesla or a couple others. Let's go look at the weekly here. 1 week performance. Okay, so this is the 1 week performance of the S&P 500 companies. We can see Facebook dropped nearly 7% right there. 7% in the week. Google down 3.69, Amazon 3.71, Microsoft essentially 2%. A lot of red in the semiconductors here, 6.28. Almost 7% there. Texas Instruments is nearly 5%. AMD nearly 5%. Nvidia nearly 5%. So quite a bit of red there within communications. So these are all the NASDAQ companies, all those tech companies within the NASDAQ. Not a lot of green in a lot of these sectors. I do see some green over here in consumer defensive. So you can see here, hey, we're not out of the woodworks yet. There's a lot of investors out there who are just not choosing to put their money into the FANG stocks, into the tech companies, right? They're going very defensive here. Companies that when times are tough, they're going to still continue to drive profits, drive consumers into their stores. So Costco, Walmart, Coca-Cola, Pepsi, those products and or services are going to continue to be used and purchased by the consumer. So a lot of money's flowing that way. So that was the S&P, Dow Jones, and the NASDAQ. So overall, we did really well this week. Now jumping over into number 3, the activity. What activity did we have? Now, last week was the 15th through the 19th. So right here, we had quite a few dividends roll in right there. So if I pull in my handy dandy calculator, let's go ahead and bring that in right there. Started on Main Street Capital because that was Monday the 15th. We had $8.39, not straight, $8.39 from Main Street Capital. AbbVie paid a very nice $11.54, followed up behind by Colgate, $11.38, Hormel Foods, $12.14, 16 cents in Main Street Capital, and $6.80 in Realty Income. So all of these little companies this week, these all got paid out on Monday. So there was $50.41 paid out in a single day, deposited into the account. In addition, we also deposited here on Friday $127.66. We didn't buy anything this past week. I thought we had, but again, I think that was primarily I was kind of looking at what I wanted to add money into. The last thing I bought there was Digital Realty Trust back on the 11th. So that may have been not last week when we were discussing. Yeah, last week in my previous video, I had thought about buying into DLR, but I really just kind of wanted to sit and wait before I made any weird choices. So we do have 2 weeks worth of cash that we deposited into our account towards maxing out a Roth IRA, in addition to $50.41 of dividends that rolled in with the past week. So yeah, still undecided as far as where do I want to invest my capital. Stock market could be heading to lowers, even lower than where it's at right now. So I could just kind of hold off and wait. I don't have to spend my money right now if I think opportunity is going to come in the future, which I do think is going to happen. Now, jumping into number 4, we're just going to track where our current dividends are at. This portfolio currently has a value nearly hitting $45,000. So here we are. $44,896, $44,896. So this is accurate. Now, this website right here is completely free. It is called trackyourdividends.com. Make an account, you log into it, you add your holdings into it by adding the ticker symbol, the number of shares, and your cost basis. You add it in there and give it a little nickname. And as soon as you've done that, you'll have created this it'll offer you the portfolio yield, the yield on cost, your annual income. So this portfolio is on its way to generating $1,300 of annual income. Right now it's at $1,244, but this continuously changes as positions in the portfolio are increasing their dividend as we're buying additional shares on a weekly basis and such. So this number just continues to nicely grow week after week, and so on. And here in 2022, we just broke over $1,000. Here we are about 8 months into the year now. We've increased past not only 1,000, but we're almost halfway there to 1,500. So very nice in the portfolio. And down towards the bottom, we can see our expected dividends here in August. We're expecting roughly $95. We received $50 just last week alone. So we've also had dividends roll in the past week, so we're not probably expecting too much in the upcoming weeks. But we can see here that this is the 3, 5, 8, and 11. So every 3rd, 5th, 8th, and 11th month, we get $95 roughly in dividends. Every 2, 5, 8, no 2, 5. It's every 3 months, right? So 2, 5, 8, 12. We get these chunks of $111, and they're very close to the biggest months in October. And these are the 2, 5. I can't think. 10. So let's go back here. It is the 1, 4, 7, and 10. Okay, 1, 4, 7, and 10 are the months that pay out the highest. So it's nice little slow trend there. It's kind of nice. So yeah, we can also see the sector diversification. This is kind of nice to kind of see if you have a portfolio that has a lot of companies within it. You kind of just want to see it by sector or by industry. You can see the sensitive companies here. So these are your technology, your industrials. These are very sensitive to rates, to because debt's expensive. These industrials, these technology companies, they live in debt sometimes. Not Apple so much, but possibly Cisco and many of the others. Then we have defensive, right? Healthcare, very defensive. Consumer defenses, Colgate, Hormel, Cisco, Clorox. These are all brands that consumers use on a daily, weekly basis. Your cyclical, these are your real estate, your financial services, your consumer cyclical. So, Starbucks, that's all, Some may see this as consumer defensive, but really, if times are tough, you may not go into Starbucks. You may start buying it at the store. You can check it out by industry as well. So there's a lot of cool little features within the Track Your Dividends website that is, worth the checkout and such. So that is number 4, guys. So that is going to be it for this video. If there's anything else you guys would like to see in the updates, let me know. I do plan on doing a not an M1 Finance, a Merrill Edge recap so far of the year 2022. So again, if you guys are not yet subscribed, go down below this video, hit the red button to subscribe and make it gray, hit the bell to get all notifications, and of course give this video a thumbs up. I would really appreciate it. It really helps out the channel. And that is going to be it. I will see you guys in the next video. Bye bye.